I welcome you all to World DNA. This is a new educational series presented to you by our new team of World DNA. In this new series, we will be discussing the emerging opportunities, the emerging news, and the emerging aspects of financial markets from worldwide. In these videos, we will be discussing what is happening in the economy, what are central banks doing, and how the markets can behave in upcoming next 1 month, 3 months, or a year. So our focus will be economics, chart patterns, and other aspects as well. So this is going to be a very educational series for all of you, and I request you to kindly provide your feedback and keep following our channel for more better content. So let us begin. Here is my friend CA Mukesh Sharma. He is expert in economics and chart patterns, and he will be guiding us throughout this video. I will be asking the questions on behalf of all of you, and he will be answering our queries. So this is going to be a very interactive video, so kindly stick with us. So disclaimer, a very important part. All the material discussed in this video are your for information and education purpose only. Kindly do recommend your financial advisor before taking any trade. So Mukesh, can we start? So
yes.
To you, what are the what you will learn by spending next 10 or 15 minutes with us? You will catch all the worldwide emerging opportunities from financial market economics. So we are just moving ahead. So let's move ahead. So basically, what is happening in economy? Our first section is economics. So what is happening in the economy? So majorly there are two things. The two changes happens in economy. Mukesh, can you please explain us what are these changes?
Yes. First of all, thank you for this beautiful introduction. Myself, CA Mukesh Sharma, and this is CA Yash. So basically, with both temporary changes and permanent changes affect the markets, but temporary changes are for affect the market for a temporary period, not for a longer run. They don't create trends. Permanent changes create trends. So permanent changes are those changes like, for example, if you see interest rate decisions, inflations, war, etc., which have major impact on the financial markets. Temporary changes are those changes like weekly data on crude oil, weekly unemployment rate claims. These changes just have effect on permanent change.
Okay, so in this video, are we going to discuss permanent changes majorly? Are we right?
Yeah, we will discuss only permanent changes.
So can you explain what is happening in the economy right now? What is happening in the economy? What is
right now? Yes. Right now, we I think is we are peaking the inflation. Currently,
okay.
if you see the inflation numbers of USA, India, Brazil, and other countries, exceptionally the European Union inflation rate that has spiked recent data a few days back. But if you see majorly in the bigger economies around the world, they have started peaking inflation. So if you see the current CPI numbers of the United States, it has fallen from 9.1% to 8.5%. People market was expecting it as 8.7% only. So, but this is still we are far away from the Federal Reserve target rate of 2%. So how this will impact the financial markets? How these things are interlinked? So if the interest rate if the interest rate if the inflation goes down, then rate of hike is interest rate hikes will also go down. The pace the pace at which central banks increase the interest rate. So how this will impact the stocks, the growth stocks, and IT company stocks, especially IPO stocks, they will rally because their valuation technique is based on, say, interest rate only. And we can also get a clue on how interest rate will be in the future by looking at the 10-year or 2-year bond yield of United States Treasury, and this will also impact the dollar. It will strengthen other currencies in comparison of dollar, which will increase the prices of dollar denominated commodities like gold, metals, etc. other countries will, as I mentioned, they will get stronger in comparison of US dollar.
So if I just if I summarize what you have just said, the inflation is declining all over the world. It means
Yeah.
that central bank will reduce the pace of interest rate hike. It
Yeah,
means
they will still hike, but the speed of hiking will get reduced.
okay. So the pace of hikes will go down, and the by decreasing the pace of hikes, the market will react positive to it.
Yeah,
And that we
yeah, market.
that we have seen in the past 10 days. Markets have just shot up like anything. So I think
Yeah,
very
that was
very
just
very
because
that is a very good proof of concept what we are discussing here. When
yeah,
inflation number peaks, markets are just keep on going high, and once the interest rate starting to reduce, I think the fear of recession will kick in and the markets will behave differently.
yeah.
So can we move ahead?
So yeah, this is the chart. This why we are saying that inflation rate has been picked. If you see the inflation rate chart of United States, right from the 1930, 1920 to 2020, the current chart patterns which we are seeing is like it is creating creating a top, like here it has created a top, like here it has created a top. After that it has gone down. So this is just for a reference, like it is creating a chart patterns like this, and inflation will go like that.
So that means this chart are showing that inflation is going to cool down in near future.
Yeah.
Okay. So can we move ahead?
So the another permanent change which I saw was China, the conflict between China and Taiwan and United States, which we all knows, like how China has created a drill, and they don't like how United States is helping Taiwan. So this will surely create issues in trade between United States and China, and they are both world top two economies, like they did in past in 2019, like they did trade war like situation can come. If conflict increases, then the supply chain will badly affected further, which can further fuel inflation, because most of the world trades goes through that South China Sea. This will be blocked by China, and maybe most of the electronic items may get costly
So
because of this.
I think the all the industries that are related to chips and semiconductor, that they are going to be
Yeah,
affected severely.
affected, and
Yeah.
car making companies, auto making companies also.
So they are going to get beaten if the this conflict rises or the tension increases between these two giants of
Yeah,
world.
yeah.
Okay. So what are the next things that's going on?
The next change which we have saw in the past week was the United States release of United States unemployment rate. Recent data on USA unemployment rate shows fall in unemployment rate, which is a quite good sign that economy is still growing. But the issue is that it has reached the bottom. If you see the chart here, this is the USA unemployment rate chart. The arrow which I have mentioned here from 1950 to 2020. We have already reached around 2.5%, above 2.5%. So if unemployment rate spikes from here, we will be in an official recession. We last two quarters GDP numbers, we have already qualified the definition of recession, but that was not shown in the actual market scenario, what economy is doing, because unemployment rate, we see that unemployment rate is not spiking. So technically we are not in recession, but we are heading towards a recession. This rate hikes may affect the unemployment rate and corporate profitability, and unemployment rate may spike.
Mukesh, can you show that chart again of unemployment rate? So I
Yeah,
think
this one.
just look at this chart. This is just looking like any stock chart. If I draw a trend line on this, we are at the bottom. We are the kind of technical
Yeah,
support at this chart.
yeah, that's what I want to
So I
show.
think unemployment cannot go below this. It has to only
Yeah,
from here only.
past has shown
So
this.
that's a very very good observation here, that
Yeah.
unemployment rate is currently at bottom and we cannot fall below this. So I think unemployment going to rise from here, and the hawkish stance of Fed is creating more chances of recession.
Yeah, I want to discuss one more thing. Like if you see this when this unemployment rate bottoms and started going up, you can see this gray area. This is actually a recession period. So whenever unemployment rate has started spiking, it created recession. You have seen
Okay.
1975, 2000, 2008 to 2020. So everything is in data. Past it has happened, and I think history may
Okay.
repeat.
So I think all the charts and data that we have discussed till now is heading and indicating a recession period in US.
Yeah,
And
in first or second quarter of 2023.
okay. So the who are the long-term investor in stock market, I think they need to be remain cautious here.
Yeah, they should be cautious. They should sit on the cash, not to not to invest for a longer period for the time being.
Okay. So can we move ahead?
And this is the S&P chart pattern, which is currently showing uptrend.
Okay.
This market has bottomed from its if you see the Fibonacci 50.5% level, it has bottomed up. So it shows that the bottom which we have hit it from the COVID crash, it has recovered from that, and this uptrend is intact for the time being. But because of that inflation peaking, this rally is because of inflation peaking. The If you see how the market reacted from here to here, this was just because of inflation. Inflation was rising, and
Interest
FOMC
rate.
is yeah, inflation has started, and FOMC and central banks around the world had decided to hike their interest rate. So interest rate have badly affected. Rising interest rate have badly affected the equities. But if we interest rate started going down, if they reduce the speed of interest rate hikes, see how market have recovered from that perspective. So it may test its resistance level at 4526, and another resistance is here around 4000. So let's see 4600. So let's see how market behave in the upcoming future. But downfall, I think it has controlled for the to some extent.
Okay. So I think this is a very very cautious and very critical period that we are standing here,
Yeah,
because markets have rallied like anything, and there is a growing fear of recession. There is a growing fear of conflict between China and China. So I think markets may blip up from here, and they beginners can catch some speed from here.
yeah, but people should invest cautiously. They should not stop investing, I would suggest, because we are unemployment rates is it's just bottomed. It is not have started yet. If we see weekly unemployment claims and unemployment rate, so when it will start spiking up, then there will be an issue, and we will update all the what is happening around the world. So we will be giving this analysis weekly, so you don't need to
So
worry about all those things.
So thank you, Mukesh, for explaining a very informative, a very educational, and a very, less known and discussed knowledge here. So I think all our viewers will be, learn very much from this video. And I request everyone who have watched this video to kindly subscribe our channel and be following us for more upcoming content. I also request you to kindly visit our website, voltdna.tk, or kindly follow us on Twitter @voltbusy. So thank you for watching. For the next time.
Thank you.
Bye bye.